Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 7th COT report of 2017, and as usual we're going to start off with the changes in commercials positions, so here we go. As you can see, we've got the Chicago wheat on top of a list with a 32% change in commercials positions. The same change can be witnessed in large speculators and a 21% change in small speculators. You can see these changes being much greater than average. It is, of course, a bearish COT change signal, possibly coming a little bit late in time. You can see on Friday and Thursday, prices have already gone deeper. Who knows if this is going to continue in the next couple of days. Opening a 5-year chart, you can see that we are moving away from bullish COT extreme levels, and as we do, you can see a steady rise in prices. I wouldn't say that the trend has changed. You can see that there is a significant downtrend that is clearly visible on this 5-year chart, but who knows, maybe this was the end of that decline and we may see higher prices in the next couple of months or maybe even years. Feeder cattle, our next market, a 26% change over there in commercial positions. You can see the change size over here. Here we're talking about a bullish COT change signal, of course, and this signal may be on time. We may see prices going higher from here. Opening a 5-year chart, you can see that we've just reached a relative bearish COT extreme just here when you can see there was a drop in prices. Of course, this may have been simply a change in the front contract of feeder cattle. I'm sure you know that, but nevertheless, it is of course visible that we had a bearish extreme, which is actually on this 5-year chart is pretty interesting to see that having prices gone so low, we would actually have a bearish extreme. But of course, if you look a little bit closer to the chart, you can see that there was a bit of a rally in the feeder cattle market for a few months, and then we reached that point in time when we got that extreme sell signal, and then we had this little bit of drop. I wouldn't say that this is the market I want to trade right now, but who knows. One thing's for sure, we're moving away from a bearish extreme, and we're more or less in between the two extremes right now. You can see that this is the most bearish part. The most bullish one, at least in case of commercials. For large speculators, that would be a pretty bearish extreme, and that would be the bullish side. Lumber, our next market, an 18% change over there. Again, we're talking about a bearish COT change signal, but you can see that basically whole last week we had a decline. It was stagnating a bit, but eventually it closed lower than when it started the week. Opening a 5-year chart, you can see that we are more or less in between the two extremes, getting closer and closer to bearish extreme levels. Of course, that is not a surprise, seeing prices going much higher. I think it's a good chart where you can see how well the COT extreme signal changes in the trend. You can see this was a beautiful bullish COT extreme signal. So COT extreme signal, a bullish one, that eventually pushed prices much higher, and you can see that as prices gone higher, we are always closer to the bearish extreme side of the market. Let's move on and have a look at large speculators COT extreme. We've got cotton and crude oil with all-time COT extremes on top of a list. Let's start with cotton. Of course, the all-time signal is not only in large speculators but also in commercials, as you may see. It is of course, a clearly visible signal. We had a significant, or maybe even all-time, I don't remember, COT extremes here in cotton a couple of weeks ago, and you can see that there was a pretty decent decline last week in the price of cotton. But if you look at the month or the last 4 weeks, you can see that prices did actually go higher. So as I always tell this to you, don't forget that COT extremes may be in place for many weeks or even a month before we really see that change in the trend. So you have to be very cautious with any entry. This just tells you that stress levels are huge. You've never seen such an extreme in the COT history of cotton. So commercials have never been so net short about the market. They're just selling and selling while large speculators are building up their net long positions. So this bubble should pop. That's what the signal is telling us. But the timing is always the big question here, whether or not it's going to happen now or we may need to wait a little bit. Crude oil, I will jump over there. 5 years chart. Here we go. Again, another market with an all-time COT Extreme signal, and cautiousness is advised over here as well. We're talking about a volatile market, significant market, of course, and I would not say that such an extreme or such a COT signal would tell you, just jump in without any more in-depth analysis. So, but hey, stress levels are high, and this just tells us that prices may not continue their rise anymore. We may see a bit of a decline happening. That's for crude oil. And last, we have the cocoa market with a 658 report extreme in large speculators. You can see that extreme over here, and a significant 244 report extreme in commercial. So pretty large extremes this week. Of course, this is a bullish COT extreme signal. We had that significance last week already, and you can see that last week we had a significant rise in prices. Whether or not this will continue, that's of course something I can't tell you, but it's an interesting market. There has been a very large drop in prices. Maybe that was it. Maybe that was the end, and we're going to see higher prices coming in the near or medium or even long-term future. That is all for this review. I hope you enjoyed it, and I hope to see you next week. Have a great week. Take care. Goodbye.